Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So thank you guys. Thank you for your patience. I was having some trouble getting set up, but thankfully we are back. So today we'll be looking at a couple of things. One of them is what happened in the markets yesterday. Two is what we're expecting in the markets today. And three, the most important key price levels of major currency pairs. We look at gold, oil, and of course, we'll be looking at the SP 500, the Nasdaq, and the Dow Jones. So once we cover these, then hopefully everyone will get something valuable for the day. So let's get started right away. So I'll be starting with the economic calendar. So the most anticipated news for the week was the US interest rate data. So the Fed yesterday at 9 p.m. decided to hold interest rates steady at 5.25%. And this was the first time since over 1.5 years. So as you can all see, since the March of 2022, the Fed has been hiking interest rates on each sitting. And as a result, we have seen the interest rates in the US rise at the fastest pace in history. However, for the first time ever, we are seeing interest rates being held level at 5.25% being the upper limit. And now, the most important news for the day after the announcement of interest rates became the FOMC press conference. So during the FOMC press conference, Jerome Powell, who is the chair to the Federal Reserve Bank of the US, decided to basically give some data points on the economy. He highlighted how inflation has been slowing down as expected, but then he's also conversant with the fact that the job market in the US is currently very hot, and this could increase inflationary pressures. So as a result, he mentioned that they are still expecting to keep hiking interest rates, and a potential rate peak of 5.6% is still on the books. So he said this is not a commitment, but the movements made by the Fed on the oncoming meetings will be heavily data dependent. So they will be looking at the data coming from the economy and using that to make monetary policy decisions. But then on the next meeting in July, there is a very high likelihood that the Fed will go for another rate hike, and these could push interest rates to around 5.5% and potentially a peak of 5.6% towards the end of the year. So with this in mind, the markets had quite a crazy reaction. So we all know the reactions that happen when investors are buying the rumor and selling the news. So the overall expectation was that the US dollar would weaken while equities would strengthen. However, from what we saw as the reactions yesterday, starting with the dollar index, there was a big spike higher, meaning that the investors had already sold before the news. So in this case, the market made the opposite reaction as investors were taking profit or basically cashing out their positions. And the overall effect was the same in most other pairs. So for pound USD, it jumped down lower. For Euro USD, it's the same thing, jumped down lower. For USD card, so the US dollar gaining against the Canadian dollar. USDN, there was a big spike. So the original direction of the breakout was obeyed. The market made an impressive leg upwards. And of course, this morning, there was a continued trade higher as investors were continuously betting on a strong dollar against the Japanese yen. So for gold, there was a spike downwards. And now we are seeing gold testing a key level support with a very nice pin bar indicating a rejection of lower prices. So perhaps we will be seeing some further upside happening in gold prices. So this pin bar or the candlestick with a small body and a long tail towards the lower side, extending through support is often a very nice signal, especially if you are a gold trader. So when it happens at a key level support level, you can see the support here, an area where the market was unable to break at a previous period. Then there's a good chance we'll be seeing gold start to reverse from this level and start moving upwards. So this one has been holding. And of course, we can all see that since the 17th of May, the gold prices have largely been moving sideways. So for Audi USD, same thing. There was a spike down, but in early morning trading, the Australian dollar was able to recover. On the other hand, we had a big sell-off happening in US equity indices. So the sell-off happened in the Nasdaq, but immediately there was some form of recovery, and the price closed higher than the opening of the day. So it was a similar movement for SP 500, a very big spike downwards, and then the market makes an immediate recovery. And of course, for the Dow Jones, there was a big sell-off, and today is when it's attempting to make a recovery. Did not quite make the recovery yesterday. So as for UK oil, you can see there was a big sell-off, and then today it's making an impressive recovery. So perhaps towards the end of the day, we'll see a full recovery from the sell-off that happened yesterday. So that's the summary of what happened yesterday. So now today is a new day. It's a fresh day on a Thursday. So early in the morning, we had the New Zealand GDP coming in at negative 0.1%. So this is not very good news for New Zealand because it basically risks recession. In the previous month, it was down 0.7%. So we could be seeing the New Zealand economy get into a recession. So those are 2 consecutive months where the New Zealand GDP has been going down. So if you see another one, then that would confirm a quarter, and that's not very good news. So for Japan, core machinery orders came in better than expected at 5.5%. So remember earlier in the week, the Japanese Nikkei 225 index was able to reach a 30-year high. And with machinery orders coming in strong and trade balance improving, there is a good chance we'll be seeing Japanese equities continue to rally. So MIA inflation expectations in Australia came in at 5.2%, a little bit higher from the previous number of 5.0%. And of course, the jobs market came in stronger than expected. So everyone was expecting that the Australian economy created 18.6K jobs, but in reality, it created 75.9K jobs. So this is a big, big number. Seems like 5 times the projection. So this is a big surprise in the market. So unemployment rate dropped to 3.6%. So whenever there is a hot job market, then we know that the Reserve Bank of Australia may need to act and hike interest rates. So if you look at the reaction in the markets for Australian pairs, then you'll notice the large volatility that happened earlier in the morning. So this is AUD/USD. Of course, after the announcement of the news, you can see that the overall trajectory is the Australian dollar being pretty strong against the US dollar. So these are bets that the Reserve Bank of Australia might have to go for a strong rate hike. So then later on, we had the Chinese industrial production coming in at 3.5%, weaker than the previous reading of 5.6%. So the recovery outlook for China is getting dimmer and dimmer. So retail sales also weakened from 18.4% the previous reading to 12.7, which was lower than expected. The expectation was 13.7. And of course, fixed asset investments dropped to 4.0% from a previous reading of 4.7%. So all these are indicative of a weakening recovery. And of course, the unemployment rate remained the same for China, so not very promising. So going forward for the rest of the day, we're looking at a couple of things. Of course, there was a tertiary industry activity for Japan, which came in stronger than expected at 1.2%. Swiss producer price index was down negative 0.3%. So this was good for the S&B. Then French final CPI came in at negative 0.1%. So when you see CPI month over month coming in at a negative number, we basically describe this as disinflationary. It basically means that the prices are actually coming down. So the most important data point for the day will be the ECB press conference, and of course the ECB interest rate announcement. So we know that the European Central Bank is meeting today. It's going to be announcing interest rates at 3:15 p.m. So the market overall expects 25 basis points, which would move European interest rates from 3.75% to 4.0%. So immediately after the announcement, they will release the monetary policy statement. Then at 3:45 p.m., this is when the ECB press conference will convene. And during the press conference, investors will be focused on what the ECB chair, Christine Lagarde, has to say about the ECB monetary policy and what to expect on the next meeting. So we are expecting that she will maintain the same trajectory. So in the last meeting, she mentioned several times that we are not going to stop, and I quote, So we are not going to stop basically means that they are looking to keep hiking interest rates until European inflation eventually gets to the target level of 2%. So besides these, for the US, we'll be looking at core retail sales month over month, which came in stronger at 0.4% in the previous reading, but now we expect this to slow down to 0.1%. So Empire State Manufacturing Index, which is basically New York, will also be a key indicator of manufacturing conditions in the US. So we follow two major states. On one side, we have the New York or Empire State, and of course, we also be looking at the Philly Fed, which is basically the state of Philadelphia. So besides this, we'll be looking at the weekly unemployment claims from the US, and of course, index of import prices in the US. So when you combine all this data, then there's a good chance that we'll be having some good volatility coming from the US at around 3:30 p.m. Of course, sometimes it could be mixed reactions, especially if the data is not moving in a similar direction. So tomorrow, it will be also a very volatile day. And in this case, the focus will be on the Bank of Japan, which is set to announce interest rate at around 1:30 a.m. So after announcing interest rates, it will also be holding the Bank of Japan press conference. So interest rates are expected to be held at the current level of negative 0.1%. We all know that the Bank of Japan is stuck with negative interest rates. So the key focus will be on the monetary policy. And if this happens to be quite hawkish, quite dovish, then we'll be looking to short Japanese yen pairs. So that's it for the day. So that's the expectation. So now when you look at the charts, there's quite a number of things to expect. So one, the most volatile pair for the day is expected to be the Euro USD as a result of the ECB press conference. So if you are a person who enjoys trading volatility, then you might be interested in looking at the Euro USD today. So also, if you enjoy trading major trends, there's quite a number of trends that are currently happening in the markets. And I would say the most convincing one seems to be the USD JPY, which traded sideways for 2.5 weeks before breaking towards the upper side. So there's a good chance we'll be seeing some further upside before we eventually get to Friday, where we see the, before we get to Friday and see the announcement by the Bank of Japan. So for USD CAD, it has really been struggling to break around this area. After the sharp drop the day before yesterday, and of course yesterday, there seems to be some form of recovery happening here. But now that we know that the Fed rate pause is only transitory, and they're looking to make more rate hikes based on the data that they get from the economy, there is a good chance we'll be seeing the US dollar begin to make a recovery. So remember, the dollar has been losing, in this case against the CAD. It has also been losing against the euro, against the pound. So we could be seeing the dollar begin to recover. However, for central banks that are expected to continue hiking interest rates, then we expect their respective currency to continue strengthening. So one of them being the pound, I expect the pound to continue pushing higher. So maybe yesterday's low high, will be a nice target for pound USD traders. That is for intraday trading. So with the dollar index being pretty weak in this morning, maybe this could change and we could see the dollar continue to regain momentum. And if this happens, then there is some currencies we might be considering to trade, like the USD JPY upwards momentum. So I think the most convincing trade for the day seems like gold, which basically shows some rejection of lower prices. So from here, there is an expectation that the gold prices could start to recover. So for Audi USD, it seems that we will be having some upwards momentum. And for US equity indices, I think some form of triangle or consolidation is shaping up. So if you go to a lower time frame and then you try and map these consolidations, then perhaps you'll be able to trade when the market eventually breaks out of these consolidations. So for US 500, I go to 15 minutes chart. It seems like we have something similar, what I would describe as a consolidation. So a market that is obeying these areas with this exemption of yesterday's volatility. So perhaps when the market breaks either of the lines, then we'll be seeing some strong momentum, perhaps to the upper side will be happening. And of course, for the Dow, if you go to 15 minutes chart, then it seems to be something similar. So from the most recent high, there seems to be a line around here. And of course, if you ignore yesterday's news, when we had the big spike happening, then this seems to be the size of the flag, and the market is just oscillating between the two. So there is a good chance we'll be seeing some breakouts happening today, and that would be pretty much interesting. So that being mentioned, this marks the end of my presentation today. So let me check to see if you have any questions, answer them before I close the session. So there's a good question. Kindly help me understand the best selling and buying setups in Forex. So I've already answered this question in a very good series called the Novice to Pro series. It's available on YouTube. Just go to FX Pesa channel and then look for the Novice to Pro series. Go through the entire 10 episodes and you will have that question answered. So there's a good question on research based on AI. So I'll be reaching out with the guy who we were doing the podcast with. So for those who are not aware, we have a Bullish Banter podcast. It's available on YouTube. It's on Spotify, Apple, and Google Podcasts. So make sure to reach to check them out. We have some impressive content on macroeconomics and what's happening. So in the most recent episode, we also covered AI platforms. So make sure to check it out. I'll be checking on the apps that are currently being used, and then I'll respond later. How does the maintenance of the interest rates at 5.2% affect the USD? So holding interest rates at 5.2% is still significantly very high. And this is 5.25 to be specific. So the interest rates are still very high. So a lot of Americans are basically pumping their money into money market funds and other money market investments, which are yielding quite some good returns between 4 and 5%. And this is encouraging savings and discouraging spending. And this is expected to hit the stock market negatively. So that's one key thing to consider. And the fact that the Fed has promised to continue hiking interest rates, then perhaps we'll be seeing a top happen in US equities. And of course, eventually equities will start to drop while the dollar continues to strengthen. So what is the difference between Fed funds rate and interest rates? It's one term that is used to imply the same. So when you talk of US interest rates, it's the same as the federal funds rate. So different central banks will use different terms. For instance, for the Eurozone, they use the main refinancing rate. So it basically refers to the same thing, the rate at which the central banks are lending money to the commercial banks. So since gold has printed a pin bar, does that imply that the selling pressure is fizzing out? Does it prompt us for some buying opportunity? Yes, exactly. There's a good chance we'll be seeing gold make a recovery. It's not guaranteed, but it's only a prediction. So there's a good chance we'll be seeing gold make an impressive comeback later in the day. So how much do traders pay in taxes? This question keeps coming up. So you have to self-declare your income and maybe seek a tax consultant. Did the Fed strengthen the dollar yesterday? I think I already answered that. On next episode or on your Twitter, I will be using Twitter for that. So thank you very much, guys, and I hope to see you on the next session.